There's a lot of madness going on right now. You guys have probably heard inflation just came back and it was as expected, but the problem is not solved yet, right? There's a lot of work to do. On top of that, we got this whole big bank blow up. You've heard about First Republic, you heard about Silicon Valley Bank. We talked about that last video. And we want to dive into everything right now and give you guys a rundown on what you should be doing in this time period because there's a whole lot of uncertainty and things could turn for the worst. So please tune in. Newsy, let's get into it, bro, for real.
Yeah, and like always, you already know everything we share, you will see in the description below. But let's get into it right away, man. So we did get back inflation news, right? And over here, as you can see, it says inflation gauge increased 0.4% in February as expected, and it is up 6% year over year, right? So let's not get that confused. And the thing is, you would think that yes, it was supposed to be at 6%. It went well, great. However, something that you want to really think about is what is happening with the banks, what just occurred in the last couple of days, and how the Fed is really tied up, right? And this article does a great job of breaking this down. So it says, although US inflation eases, but stays high, which puts the Fed in a tough spot, right? So, well, let's talk about this. And we're going to show you guys basically a chart which shows a complete breakdown of what the inflation has been on average year over year for the last 22 years, since 2000, really. But before we get into that, Rel, can you just talk about, bro, like, and I'm leaving this on screen for you guys to read, but Rel, let's talk about it. What is inflation really supposed to be on average, right? What do they want?
We want to see it come down to about that 2% area. That's something that Jerome Powell has been adamant about. He's been saying that every single time he speaks. And so until that job is completed, he's going to keep staying aggressive on monetary policy.
Exactly, right? So when you think about that, and literally what Rel just said is true, the thing is, this right here kind of sums up everything. So when you see it says, when measured against prices a year ago, inflation has been easing for the last 8 months, which is true, right? In February, consumer prices climbed 6% from 12 months, which is what we just mentioned, down from 6.4%. You're thinking this is all great, but remember what Rel just said. Yet it remains far above the Fed's 2% annual inflation target, right? So that's what you have to think about. The target that the Fed wants is 2%. And that's why Jerome Powell is always increasing interest rates. However, as we said, there's a lot that's going on that's kind of holding him back right now. And we're about to dive into that. But before we do that, check this chart out, right? And check out this whole breakdown. So we showed you guys this before. Essentially, this is just showing you guys the inflation rate per month for the last 20 something years, since 2000, right? And look at the average, which is on this column right here. So 3.4, 2.8, 1.6, et cetera, et cetera, et cetera. You don't see anything crazy until, Rel, what is this right here?
Not a big 8.0.
And bro, think about it, right? As we said, it's been slowing down from 9.1, but look at the drops, bro. 9.1, 8.5, and then 8.3, 8.2, and then 7.7, 7.1, 6.5. That is why the stock market was rallying. And then we get sticky from 6.5 to 6.4, and then 6.0. But that's because he was still increasing interest rates, which brings us to the next point. So, Rel, you want to explain real quick what this tool actually is? I know we talked about this multiple times, but just explain to the people what this actual Fed Watch tool is and what it means.
Yeah, so basically this tool shows you what futures are anticipating the Federal Reserve to do when it comes to the next FOMC meetings for the rest of the year. So there's tabs up there that if Newski were to click on them, you would see that they pretty much show you what's anticipated when it comes to the interest rate hikes for the rest of the year. Like, so right now we're looking at what we expect at the March Fed meeting. And this has been crazy to look at day by day. I'm telling you, because I look at this every single day, guys, because I trade. And when I trade, this affects my trades because this affects the stock market. So even you as a long-term investor should be tuned into this because this completely affects your investments. And so what we saw was even just up to last week, after we got the jobs report and everything, everybody was thinking, oh man, this is not really good. The Fed is probably going to end up doing 50 basis point rate hike at the next meeting in March 22nd, right?
Mm-hmm.
And then
Hey, before you say that, bro, it's not that we think. Just make sure, because I want to make sure that's very clear, bro. There was a 70% chance. Y'all could see where my mouse is right here. Y'all could see it. 69.8, really 70% chance that this was going to increase 0.5. So now continue, bro.
yeah, exactly. 0.5% interest rate increase, which is huge because we were thinking that he was slowing down to only doing 0.25%. And then out of nowhere, the stock market reacted really negatively because everybody thought, oh man, he's going to be doing 0.5%. That's higher than we expected, which would be bad for stocks. And then out of nowhere, the banks have this whole fiasco over the weekend, which we went into detail about on our last video. So please watch that. We went really simple for you to understand. But yo, ever since that, look, there's 0% saying that we're going to do a 0.5% rate hike. And on top of that, you now have 20% of futures traders saying that he's not even going to raise interest rates anymore. That's a huge turnaround from being more aggressive to completely not raising at all and just staying where we at.
And that reason we're really showing you this is because y'all need to understand, right? All of this is happening within a matter of days. And I'm not even saying weeks, literally days. Like 1 day ago, this was the percentage. 1 week ago, this was a percentage. And now we're at over here, right? So that's why there's so much uncertainty. And the reason for that is the banks and what just happened, right? Because essentially, if you think about it, if so much is going on in the banks, there's a huge run on the banks. These banks are in top 10, top 20 banks in the country. Jerome Powell's in a sticky situation because he can't necessarily increase rates, because if he does 0.5, bro, we know it's going to be terrible. We just had a terrible market in the last couple of days, so he can't do that. He can't not increase interest rates because what will that do to inflation, right? There's always that uncertainty. So now it's like, all right, we got to just rock with the 0.25 and see what happens. So that's really what's going on. But before I show you the actual madness we're seeing in the stock market with some of these banks, and it's not just Silicon Valley Bank, can you please do us a favor and like this video, because we put a lot of time and effort into this. And I know you're watching right now, so if you are, thank you. Just make sure you hit that like button. But, Rel, I really want to talk about this one right here, bro. First Republic shares rise more than 20% in volatile trading as regional bank stocks try to rebound. This came out on Tuesday, March 14th, right? Keep in mind, it says 20% and went up. What does this say right here? Just read that for me, bro.
They fell more than 60% on Monday just to be up 20% on Tuesday.
So for those that are like, yo, what? I'm going to show you a visual. Look at this. 1 day, literally 1 day, 27% basically. 5 days. Look at that drop down. Just look at this. Look at that drop down. And then all of a sudden, look at this run up. This makes no sense, right? We have no idea what's happening. But guess what? They're not the only bank. Go look at Charles Schwab, which is a huge bank. Look what happens right here. In the last 5 days, they're down. You see this little drop down from right here, Rel?
Yeah.
That's a significant drop down, right?
Well, in fact.
All of a sudden, 1 day, boom, they're right back at it.
And that just points to like even the manipulation that goes on in the markets too. You know what I mean? Like they'll trap people into because traders, what we do is we bet on price movement. So when you see it going down so much, people start continuing to bet that it's going to go down, and then they'll just shoot it up out of nowhere, right? And it's like it kind of is just a summary of what's been going on in the markets. It's been a lot of manipulation. It's been a lot of uncertainty. Nobody knows what's coming next. You see it in the economy. Nobody knows what's coming next. One inflation report is hot. The next one is as expected. And it's like, bro, Jerome Powell, we just showed you in the Fed Watch tool. Everybody thinks he's going to do 50 basis points in March 22nd. A few days later, no one thinks he's doing that. And in fact, they went to start thinking that he's going to pause rate hikes. Who the heck thought Jerome Powell would pause rate hikes in March?
After the meeting that he just had.
Facts. Just last week, he had a meeting where he was stressing the fact that he has to pretty much remain aggressive. Just the people starting to think, oh, nah, he can't remain aggressive because of things like Silicon Valley Bank and First Republic. And so it's like his hands are tied because it's like you go aggressive, there might be more bank runs. If you go less aggressive, inflation is going to go crazy again. Nobody knows what's going on, bro.
And that's why this leads us to the last point that we want to make in this video. Essentially, look, we are not experts when it comes to seeing the future. No one is. That's not possible. At the end of the day, what we do is we do research on the market. We try to summarize everything that's going on and provide it to you guys. So right now, what we're personally doing is we're staying cash heavy. We're doing our regular investing as you always should. No matter what, we've shown you guys multiple times. It's at the end of the day, it's proven theory. Do not run away from it. DCA, dollar cost average, invest on a weekly or monthly or bi-weekly basis and invest in things that make sense. I'm not telling y'all to invest in crazy banks just because they're going down and then just all of a sudden they're going up. Stop gambling your money. Be smart, be responsible, because this is your hard-earned money. So that's really what we want to talk about. Any last words, bro?
Honestly, like Newski said, I want y'all to just be safe out here because the stock market is a treacherous game right now. We're living in truly historic times, and it's good, like I said, that I trade because I can benefit when stocks go down and when they go up. So if you ever want to learn to trade, you could definitely hit us up, and I'll try to help you out too and stuff, because that's a good way to bring in income. Like as the stock market is crashing, I'm getting paid, to be honest, you know what I mean? And even when it goes up, I get paid again. So I kind of want you guys to maybe learn that skill, because that's definitely a way to survive this type of market, which is insane and historic.
That's a fact. But if you're still watching, we appreciate you. Please make sure you check out our video that we dropped on Sunday, actually, because it was an emergency video on Silicon Valley Bank. So you understand what's really happening and you have a clear view of how to move forward. But thank you. Please make sure you like, comment, and subscribe to the channel, plus that little notification bell because we drop
2 videos a week.
Don't want to miss them. Stay safe. We'll catch you on Monday. Until then, peace.
Peace.
Soundstripe.